Good morning. It's Wednesday, September 3rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the ETFs, they increased their holdings in gold for the 8th straight day. In silver, if you received the chart pack, I indicated that $42 would encounter some resistance and $41.99 was the high of the session. Now, if we could break through that level to the upside, 42.43 would become your volatility adjusted resistance point one. Now, checking in on your setup in the equity markets, the precious metals, well, equities, they are set to regain some ground after 2 days of losses. We had that Friday month-end selling. We also had Tuesday, some of that panic follow-through. At one point, the S&P was down about 100 points here yesterday. Now, a large part of the gains came from just two specific stocks here. It was Alphabet and Apple, both jumping on favorable decision in Google in this antitrust case here. Those two stocks make up about 11% of the S&P 500's weighting. If you were sitting next to me right now, you would see that I have one dedicated huge TV over here that just has the 5-minute and the 15-minute of the intraday charts of all those key stocks here in the Mag 7 because of the fact that they weigh in at about 36% of the S&P 500. I like to see if there's any kind of anomalies that are going on in there. At one point, you saw Google, just as we came to the close, start to take off, and it was a delayed reaction with many of the other outside stocks within that realm, and then the futures contracts had lifted after that. Now, the main action also has been in the bond market where they're facing some renewed selling pressure. The 30-year Treasury yields are now just about a whisker away from that 5% level, and that's part of the global economy here and the global long-dated bonds having some jitters around inflation, debt sales, also fiscal discipline. So you look at 10-year Treasury yields, they sit at about 4.24% here, falling within this descending wedge pattern and getting close to the end of the line. A lot of times when you see this kind of compression type to occur, one catalyst event often drives it and it starts its next trending direction, either higher or lower. Now, we are going to have some economic data here coming out today, some Fed minutes, some things like that, some other key data here coming out at the end of the week as well. You look at the S&P 500 just up about 0.5%. You got the NASDAQ up about 0.75%. You look at European trading. Well, European stocks, they did rebound, led by miners and technology stocks, while Asian shares, they headed for their second straight day of declines. Now, all the highlight has been in the gold market, and gold did print a fresh all-time high in the overnight session on the futures contract, 36.1690 here, as the prospect of U.S. interest rate cuts kind of boost the metals appeal here, and traders were looking for some safety following those 2-day sell-offs, the volatility here in the equity and the bond markets to start the month. Now, September has been historically a weak month and a tough month for the U.S. equity markets, but who knows, maybe that first day sell-off was all that we got here in the trading action. So you look at gold up about 30% year to date, making it one of the best performing commodities. And we really need to monitor that important jobs report on Friday, which is likely to indicate signs of a weaker labor market and bolstering that argument for interest rate cuts. JP Morgan, their digital asset and alpha group, they put out an excellent report here. And I usually grab this ahead of any kind of serious economic data because they give you kind of a view as far as what they believe that different scenarios might occur with that non-farm payroll report and how it'll impact broader markets like the S&P. For all you bears out there, they're saying that anything above 110,000 really puts some pressure here on the markets here with just a wide degree of volatility expected in the U.S. equity markets, anywhere from a gain of 1% to a loss of 1.5% here. So that's if you get that huge 110,000 print. The most likely scenario, they give it about a 40% weighting as we come between that 65 and 85,000. They believe that the S&P 500 will see about a 0.5 to 1% gain here, and then anything below 40,000, they really believe that the S&P could lose about 1/4 to 0.75% here, and I believe that we'll probably see an acceleration of the downside on that sell-off because the recession worries will come back into play. Now, what are the options pricing? For those expiring on September 5th, the market is expecting really about a 1.15 basis point move in either direction back and forth. Now, we get back to the metals markets, both gold and silver, they've more than doubled over the past 3 years here with the mounting risks of geopolitics, the economy, global trade here, just really increasing that demand for those type of safe haven assets and those commodity plays that hedge against inflation. Now, the markets, they're really waiting for this landmark ruling on whether Trump has legitimate grounds here to remove Fed Governor Lisa Cook here from the central bank. If he could deem that legal here, that move would allow the president to replace her with a dovish-leaning official. That was one of the news headlines that a lot of different medias were covering yesterday because of that property that she bought was fully rented here, indicating that those were most likely the intentions of that property, and they're really trying to hang her on the mortgage fraud case. Not trying to get into politics or anything like that. These are just some of the facts and some of the headlines that I'm reading here and some of the bullets. Now, you look at the silver market. Of course, gold's had an impressive performance in 2025, but it's been surpassed by silver. The metal's up about 40% this year with prices on Monday breaching that $40 an ounce, overnight getting to $41.86. Again, resistance just under that $42 mark, but I believe if we come up to that level, we should be able to see a push through. I mean, it's industrial uses, it's clean energy technology, solar panels against that backdrop here that the market is headed for its 5th straight year of deficits. And that comes according to the Silver Institute. Now, investors, they've really piled into the ETF funds, which have expanded for 7 straight consecutive months. And remember what I tell you is you really want to look at kind of the direction that any kind of data that you're following, some hard data out there, which way is it going and which way is the rate of change of that going. It doesn't matter what it is. If you're looking at, your yields on your grains, if you're looking at ending stocks, if you're looking at export data, anything like that, you always want to look at what's the direction of the data. Does the price action confirm it? Does the data accelerate at an alarming level? And when does it level off here is maybe when you start tightening things up. Now, if you look at some of the data that's here that's coming out, we're going to have the JOLTS data, the factory orders, the durable goods, those are all coming out, and then the Fed Beige Book here later this afternoon. You look at the copper market, copper futures are starting to take some interest. So take a look at that chart here. Look at how we're poking up. Look at how we had this consolidation level. It looked like we were forming this bear flag and we were going to break down to $4. But given the electricity demand, the AI spending, and just the infrastructure demand, that copper prices may have settled out on the downside and are starting to work their way up here. Not a recommendation, just an observation out there. They do have that micro contract, which is 2,500 pounds. Every penny moves, so if copper goes from 464 to 465, you're going to gain $25. If it goes down a penny, you're going to lose $25. So again, not a recommendation, just an observation, something to throw on the charts here, something to look at here. A lot of people have, positioned themselves in the gold market, positioned themselves in the silver market, seen that breakout in the platinum market take away, seeing palladium futures push back up to some resistance level, the gold silver ratio coming down to 86, and then what they do is they start to expand and look at other commodities that are out there. What's oil doing? What's Bitcoin doing? What's Ethereum doing? How are the grains trading? Corn's been an excellent trade here with Trump's tariff policies being attacked and deemed maybe not valid given to some of these court rulings. That's where China kind of holds off and says, hey, we don't need to negotiate with the U.S., and that's why you see soybean prices fall about 14 cents. So all these things are really interconnected with the global economy and a lot of data that comes out there, and that's what I like to observe. You look at crude oil, it's falling after a report that the OPEC Plus alliance may consider some fresh round of supply increases once they meet this weekend. So expect, if you're trading in the energy markets, if you got a nice position going on here, perhaps you trim some of that going into Friday. You don't become a hero here. And then you monitor for any kind of developments with OPEC, OPEC Plus. You read our energy report we put on a daily basis, and that gives you some of the insights that's going on in that particular market. You look at the precious metal ETF flows. Well, ETFs, again, I reiterated that gold holdings have expanded for 8 straight sessions. They've also been buying silver. So gold notched up 13%. Year-to-date percentage change, that's the first time we've seen that handle. They added about 477,000 troy ounces in their holdings. Biggest one-day increase since June 12th, 8th straight day of growth here. Longest winning streak since June 24th. Those are the things I like to see here. I like to see those winning streaks. I like to see the biggest deficit, the biggest gain, things like that, especially being a sports fan. That's what you want to watch, this momentum take place as you go into the MLB playoffs and things like that for a run to the World Series. Now, silver up 12%. The exchange-traded funds, they added about 280,000 troy ounces of silver. If you'd like to become a client of Blue Line Futures, send an email to info@bluelinefutures.com. Our clients love us. Our interaction's great. We give you guys some straight research, some things that were written here by traders, for traders, and we like to give you the insights that we can give you here and try and do the best job we can for you. Again, you got any questions, shoot that email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.